First of all, so I'm going to talk a lot about the markets. I'm going to show you a lot of charts, but that is no inducement to trade, right? So that's this. Today's presentation is only for educational purposes. Only there's no inducement to trade. If you need to buy any stock based on today's seminar, you are buying it at your own risk. All right. So this is what I'm going to cover today. I try to cover as much as I can on the US election, impact on the stock market. And it will not be complete if I don't talk about vaccine, all right? Because the COVID is also a big issue today. It is a market mover. So I want to talk a little bit about vaccine recovery and beyond. Some case study beyond 2020, moving beyond 2020, the KShape Recovery, and also then we discuss some charts of the global on the major markets, and also I want to show you some of my stocks, some stocks that I'm looking at. All right, so a lot to talk about. Let's go. So for US election, these are the possible outcome. First scenario, Donald Trump wins, Republican wins the House, Republican retains the Senate. So technically nothing changed, all right? So that is the first scenario. Second scenario, Donald Trump wins, Republican wins the House, Democrat wins the Senate. The third scenario would be Donald Trump wins, House got more Democratic majority, and Senate got the, Republican got a majority, and that is the current composition. Okay, so that is the current composition now. The fourth, all right, the fourth scenario is Biden wins, Democrat retains the House, all right, and Democrat wins the Senate. And this is what you would call a blue wave victory. Okay, so it's a blue wave victory where Biden wins and Democrats basically control the whole Congress. All right. So the other one is Biden wins, Republican wins the House, and Democrats wins the Senate. Biden wins, Republican retains the House, and Democrat retains the Senate. All right. So these are the 6 possible outcomes, and I would think that the fourth and the 6th outcome would be the most probable. Okay. If you have been reading the news, you will know that Biden is taking a big lead, and on the polls, all right, so the polling data is showing that Biden is taking a 9-point lead. And just comparing the previous election polling polls, 9-point lead is a lot, all right? So during that time when Hillary in 2016, she was leading by about 4 points, 4 points. And that 4 point was not a firm 4 point, all right? That 4 point was a flip-flop 4 point. Sometimes, she would be trailing, and sometimes she'd be leading. But by and large, she leads by about 4 points. But today we have Biden leading by a very clear margin, and that is 9 points. And, that is clearly a big lead, all right? And that is the average poll that we got from at least 8 agencies. Okay, so what about, but then you'll say that in the last round, right, in 2016 election, the polling data were not accurate. All right, and true, in the last election, we had Hillary Clinton winning on or leading on the polling data, but, well, lo and behold, we end up Donald Trump winning. So a lot of people will say, these polling data, well, they're not accurate. Maybe it will happen again. But polling data may not be accurate, all right? But gambling odds, right, are normally quite accurate, all right? Let me tell you why. So gambling odds are accurate because we have people are putting their real money on it, all right? So when you put your real money on something. For example, if I'm putting my real money on Biden, and this gambling odds, when people put their bets going to betting shops, all right, when they go there to put, they are putting their money there, and a lot of people are betting on in this race, and when you put your money where your mouth is, it is the more reliable sort of outlook. All right. So here we have gambling odds, just pulling apart with, and gambling odds is showing that Biden will win by a big margin, 70%. And if Donald Trump wins, there's only 30% chance of Donald Trump winning. Well, this week is sort of narrow a little bit, but still very big. All right. So it's sort of narrow to, I understand, maybe about 65. All right, to Biden, and 35 to Donald Trump. But by and large, still a very, very big lead. Okay, and according to odds, okay, that we have here, Democrat is likely to take control of Senate. All right, so these are the election models, and they are showing, all right, so that the Democrats is likely to control Senate, which means that we could get a clean sweep. So we could get Biden in the office as president, and we have Democrat controlling the Senate and the House. All right, and that would be what we'll call a blue wave victory. So two likely scenarios: blue wave victory, Biden wins presidential, Democrat retains House and take control of Senate. Biden wins with a split Congress. All right, Biden wins presidency, Democrats retain the House, and Republican control the Senate. All right, so these are two very likely scenarios. But in both scenario is Biden wins. Okay, so today, there's so many scenarios to talk about. There are 6 scenarios to talk about, and therefore, I don't have time to go through all the 6 scenarios. We'll only do 2 scenarios. So a blue wave victory scenario, Democrats is likely to implement a lot of spending policy on infrastructure, healthcare, climate, education, labor initiative to offset against the battered economy. So the Democrat, right? The Democrats' primary objective when they want to come in, Biden's objective primarily, all right, is to restore the economy from the destruction that the COVID has levied upon it. All right, so that is the primary priority of Biden, and you could hear it in today's debate, right, between Biden and Trump. Biden had a concrete plan. He had a standard. He spelled out his standard plan to reopen school, to help businesses, all right, and to do so many things. He has got a concrete plan. But Donald Trump, he doesn't have concrete plans, all right. So, and some of the plans that stand out, right, in Biden's campaign policy is spending, all right, which is spending a lot of money to get out of this economic crisis. Okay, so spending in the above are likely to counteract raising corporate tax and tax on high income. All right, so another Biden's policy, all right, which the market don't quite like, especially Wall Street, they don't quite like, all right, is that Biden has proposed to roll back, all right, what Donald Trump has done. Donald Trump reduced corporate tax, and Biden wants to now roll back those corporate tax cut, and that would be bad for companies. That would be bad for rich individual that earns $1 million and above per annum. All right, so that would be bad. But I don't think, all right, under current condition, I don't think he's going to go into office and do that straight away. All right, that would would not be good for the economy. So because the economy is in bad shape, I think he will first do the stimulus, and then he has no choice but to raise some taxes to fund the stimulus. Okay, so then he has got no choice. So Biden's victory with a split Congress scenario and its impact on the Chinese stock market. So if Biden wins with a split Congress, all right, he will still pass his stimulus bill, like what Donald Trump did over the last 4 years, somehow he got his way. He got a lot of opposition from the Democrats, but somehow he got his way. But it needs a bit of time. All right. So Biden is going to, same thing is going to happen to Biden. All right. He's going to face resistance, but in the end, he will get his way. All right. And compared to President Donald Trump, whose mantra, right, was American first, Biden is more likely to seek a common ground with the world, all right, and of course with China. All right, so Biden is likely to be more reconciliatory, all right, more collaborating, all right, and more consultative, I think, all right, with his policy. So we'll see, a more friendly America, maybe, all right, and things will be done in a more cohesive and in a more friendly manner, all right? So this could provide temporary relief. So if this is going to happen, it could provide a temporary relief for Chinese equity, all right? So if Biden wins, China stock is going to go. All right, the Chinese stock is going to go. A lot of people is going to. So it's a lot of funds are not getting into China stock because of all the threat that's been levied on Chinese companies. All right, and it's a lot of tariffs that is put on China now. And if Biden wins, there's also a hope that Biden may roll back those tariffs and seek a new agreement or new solution with China. So if Biden wins, all right, so what happened to the dollar? So analysts are expecting that Biden wins will be negative for the dollar given the high likelihood of less competitive foreign policy and trade policy, and also a lot of spending, all right, in the form of larger fiscal stimulus package. All right, so a lot of money is going to be printed, a lot more money is going to be printed, and after I'll show you how much money will be printed. So on the other hand, the market volatility have the tendency to increase, all right, before the general election, leading to a stronger dollar than usual. So before the election, it could be stronger for the dollar, but after the election, the dollar, all right, could see some weakness. All right. So what about Biden's impact on bond yield and inflation? So Biden will likely to push fiscal stimulus, which investors expect will help the U.S. economic growth. Conversely, will result in higher inflation going forward. All right, so with a lot of fiscal stimulus, with a lot of money printing, there's only one way to go. All right, when the market finally picks up. All right, so we have COVID now, and I'm expecting this whole COVID situation, pandemic, to be sort of get better, in the next 6 months. Okay, and I'll explain that later. And once the world gets back, all right, to close to normal, pre-COVID situation, all right, we will see a big, huge spike in inflation. Okay, and that's where the problem will come. So Biden victory will ultimately result in inflation. All right. Okay, so you have to bear that in mind. All right, what is going to inflation do to the stock market? I'll talk about it later. Right. So this could also result in steepening of yield curve, where the gap of short-term bonds and long-term bond will increase. Okay, and that will be also a problem for the Fed. Okay, so what is the difference between Biden's policy and Trump's policy? All right, so for Trump, all right, economic policy, secure economic recovery, same Biden was secure economic recovery, but he wants to reduce inequality, all right? So it will not be just a lot of policy aiming at Wall Street and the rich, but, he will seek to make sure that the wealth is equally distributed. So fiscal policy, Trump wants to cut the individual payroll and capital gain tax, while Biden is clearly on the opposite. He wants to increase tax on corporation and upper middle class individual. All right, Trump wants to end the Obamacare Act, the Affordable Care Act, but Biden wants to expand the Affordable Care Act, all right? So Trump, wants to reduce trade deficit, aggressively negotiate trade deals, employ tariffs, withdraw from WTO. Biden wants to reduce trade deficit, the same, employs tariffs, improve trade relationship with allies, and re-engage WTO. So he will be more reconciliatory, adopt a more reconciliatory approach. All right, so in terms of regulation, Trump will want to continue to reduce business regulation, but Biden will reverse Trump's deregulation measure. All right, Trump will want to increase infrastructure spending significantly. Same, Biden will want to increase significantly, but look here, he's going to increase infrastructure spending significantly, emphasizing on green energy. All right, so it's a lot of alternative energy play, coming in if Biden wins. Okay, so but it's not going to be good. All right, Donald Trump has always advocate increasing fossil fuel production. All right, and that can only be done with a non-compliance with the Paris Climate Agreement. So that's why he wanted to tear the Paris Climate Agreement apart, so that America can continue to emit dirty fuel. All right, but Donald Trump, he wants to join Paris Agreement. He wants to promote green. All right, he wants to promote the Green Deal. He wants to promote alternative energy, and finally, foreign policy. Donald Trump wants to restrain China, U.S. unilateral trust. All right, but under Biden, we will see, you will continue to, I think restraining China, from going forward, from advancing or from taking a lot of global leadership over so many things in the world today. All right, global ship in technology, global ship in WTO, all right, global ship in green energy. All right, China is taking leadership in all that. And this is what US as a national policy don't want. And even if Biden comes in, this will not change, all right? US will continue to be suppressing China's advance, all right? But now with a difference, all right? So Biden will still adopt the same policy, but, we've improved relationship with traditional allies. So which means, for Biden, he's not going to do it alone, right? He's going to gather the concurrence of all the allies against China if he's going to continue restraining China, and that, in the end, could even prove to be more serious than Donald Trump. Okay, so we talk about a lot of money is going to be printed, all right? So this is the amount, all right? It's going to be printed. So just look at the Biden part, all right? Total spending, 11 trillion. If Donald Trump comes in, he's going to spend another 3 trillion, but Biden is going to be like at about 4 times more. Okay, and childcare, all right, healthcare, but the biggest spending will come from infrastructure. You see that 4 trillion, all right, 4 trillion. Infrastructure and green energy, all right, will take the biggest share of the spending. All right, and which means, a lot of green energy stock is going to continue to outperform, and a lot of infrastructure, is going to continue to outperform. So when Donald Trump is in power, a lot of his monetary policy is geared towards holding up the U.S. stock markets. But Biden's policy is, a lot of it is geared to be improving the U.S. economy, especially, the structural part of the U.S. economy, all right? Like, the infrastructure, and, he just basically wants to be, spending to make sure that U.S. are getting more jobs back, a lot of jobs back, all right? And the only way to do that, is to increase tax, all right? All right, so the tax increase, but, still, what concerns us here, all right, is that although, all right, we're going to have a tax that will supplement the spending, but the spending itself, all right, is going to be a lot. All right, so the spending is going to be a lot. 11 trillion. Have you ever wondered how much money is $11 trillion? You know, Chinese foreign reserve after 40 years is 4 trillion. All right, Donald Trump has already printed 6 trillion. All right, during his term in office, and we're going to print another 11 trillion. You know, think about it. Right, think about it. See all this money that's going to be printed. Right, it's going to be circulated. Not only US, it's all this money is going to flood the world, right? It's going to flood the world. It's, you know, the US dollar is going to be converted into Indonesian rupiah. It's going to be converted into Seng dollar. And all this money is going to flood the world. The money is not going to evaporate. Once printed, it's not going to evaporate. Okay? Which means, right, the worst thing, right, all of us can do today is to keep money, is to keep cash. You need to learn how to deploy your cash, because, you know, the whole world, all right, in economic situations like that, every country around the world want lower currency, all right? They want their currency to be as low as possible so that the country can be as competitive as possible, all right, in exports. So it's a lot of money. Think about it, all right? So if you are able right now to think ahead of everybody else and to be ahead of the curve, all right, on the impact of so much money flooding the world, you will be the winner, all right? So this is the big story. The big story is not about COVID now. COVID is going to be over soon. So sooner or later, COVID is going to be over, all right? It's just a matter of time. I mean, we have seen in China how it has controlled COVID. And the Chinese economy is almost back on its feet already, all right, to pre-COVID levels. But what is printed, right, cannot be undone, all right? And the amount of debts the corporate individuals today are taking and the government is taking today is unprecedented. So think about that, right? You guys got to think about it, right? So what will happen, right? What will happen when the economy finally turn around? What will happen to all this money? Where is it going to go? So this money, right, you know, it is a two-edged sword, right? Two-edged sword. One is that, you know, it will keep inflating asset class and your property prices will go up, your stock market go up. But the other side of it is that if inflation rears its ugly head, all right, if inflation rears its ugly head, that, you know, will be, you know, very, very tough even for the central bank to handle. Remember this, right? Remember this, that interest rate is at all-time low, right? And whatever the Fed wants to do, they've already done. Whatever they can do, they've already done. You know, what else can the Fed do with interest rates, right? Their main monetary tools, all right? What else can they do? You know, would it make a difference if they, you know, lower interest rate from the current 0.5% to minus, all right? Would they make a lot of difference? I don't think it's going to make a lot of difference, all right? Which means the Fed technically is checkmate if inflation resurfaces again, all right? So think about it, right? Think about it. So what will you do, all right? What should you be doing now? All right, so Biden victory, right? So Biden administration with Democratic open the House are likely to enact antitrust laws, all right, which is bad for the FANGs, okay? And it could give the unloved value stocks that has been out of favor for the past decade a boost, all right? So Biden, when he comes in, may not be good for the FANGs. And I personally think that the FANGs, the Apple, Amazon, and all that, right? You know, it's time. You know, I think they could be peaking, all right? And if Biden rolls out his stimulus, remember, Biden's stimulus, right, is geared towards the economy, not the stock markets, all right? And Donald Trump's policy is geared towards the stock market, not the economy. Right, all he's interested is hold the stock market up so that he can be voted back to office. Biden is not, right? So which means, right, a lot of this, you know, FANGs, high valuation, right, may not be supported, all right, for too long. All right, so this could each investor to rotate out of US tech stocks into smaller cap stock. There are also similar concerns that the US healthcare stocks about the impact of the potential Biden-led reform on pharmaceutical markets, with Joe Biden's plan to unveil his anticipated Healthcare Act, which could change the provision in the Affordable Act to improve access to the healthcare by reducing insurance income, all right, cap to 8.5% at previously 9.6%. So which are the sectors that will benefit? Green energy, infrastructure stock with the construction, building material stock, energy storage company. Okay, so these are the companies that will benefit, all right, that will benefit. And so these are the ETFs that you should be looking at, all right? All right, so these are ETFs that will benefit from Biden's victory, all right? I think, it will go a long way if Biden were to win. So find a good time, all right, to get into this ETF, the green energy ETF, the infrastructure ETF, the energy storage ETF. So these are a couple of ETFs, right, that will be good, all right. And if you if you want to, before the election, while people are still guessing whether Biden is going to win. When Biden wins, this ETF will move up, all right? Okay, so today we have the COVID case still rising, but the death rate is, not increasing as much. So the COVID, eventually, I think will burn itself out. There is no turning back anymore, all right? US is not going to lock down again, all right? Like the other countries, it's not going to lock down again. The economy is continue to move forward. But, with infection rates going up, that's bad for Donald Trump, all right? Because, infection rate is Donald Trump's best running mate. Best running mate in the sense that, as long as the infection is growing, Donald Trump's chances of winning the election gets dimmer. Okay, so back to the vaccine. All right, so, a lot of people today are still thinking whether a vaccine, whether we would have a safe vaccine coming. All right, so I don't think the question is about whether we will have a vaccine. We will have plenty of vaccines. All right, plenty of vaccines. And today we have seen so many of this vaccine on trial. All right, so if you have been reading the news, right, Sinovac, right, have already been distributing their vaccine in China. So, today, if you have money, you can go to a government hospital and you can get an inject, all right, on Sinovac vaccine. The problem with vaccine now is, I don't think it's really a question of whether we're going to get a vaccine. The question is, when we get a vaccine, are we going to be able to produce them in the sufficient number for distribution on a global scale? All right, so that is a tough question, all right? So that will be a question, but I think that, a vaccine will come sooner or later, because currently there are 6 phase 3 testing vaccine candidates already showing promising results. These vaccine makers are already ramping up supply, all right, to be made available second half of next year. So the speed of the vaccine progress is unprecedented. The advancement of vaccine testing could lead the economy to normalize. All right, so expect the economy to normalize faster than expected. Okay, so, and the other thing about normalizing the economy, really is not only about vaccine, it's about testing. All right, so the current testing method, right, which is what we call the polymerase chain reaction system, all right, so that one is a little bit slow. Okay, accurate but slow. All right, so there's a cheaper method that will soon be implemented for mass testing. That is an antigen testing method, which will be coming very soon. So look out for the advancement in antigen method. And once we have a good testing method, we have a good vaccine, we are going back to normal, and I believe we are going back to normal sooner than a lot of people think. So this is the Bouquet scenario for financial market. Economy recover faster. Fiscal stimulus reinvested allow economy to recover even stronger than the pre-COVID levels. Rolling out of successful vaccine, all right, sustained long-term interest rate environment, avoiding risk of further uncertainty like the US-China trade tension, missed managing of inflation rates, and vaccine failure. All right, so this is a bull case scenario. All right, which I subscribe to, but for about maybe the next three to 6 months, perhaps. All right, we're going to have a bouquet scenario with, but the bear case scenario will be elevated U.S.-China decoupling, new virus setback, which I don't think is likely. All right, I think all over the world. Today we see the COVID cases. Every day we have COVID cases increasing. They're not decreasing, but the stock market still is not reacting, which means, right, the market have already discounted COVID altogether. All right, so not likely. All right, and also the cure is is sooner than later. All right, so what we are seeing now, all right, is a K-shaped recovery. All right, so in case you do not understand what's a K-shaped recovery, so K-shaped recovery is that some sectors, all right, do better than the other sectors. Like for example, in a K-shaped recovery under the COVID pandemic, the e-commerce, the technology, the gaming, the app service, the electronic, and the healthcare, they do a lot better. All right, but tourist-related airlines, travels, hospitality, entertainment, they're not doing too well. All right, but I think, right, in a couple of months when the vaccine comes, is distributed, we could get a switch over, and that's where the problem comes in. All right, so today, a lot of us who stay at home are doing the stay-at-home things, Zooming, playing games, trading the stock market. So can you imagine, right? One day when the vaccine comes, we have other things to do. We are thinking of, leaving the house, go for a tour, do something else. You could see the restaurants opening. So a lot of people will start beginning to do, a lot of other things, and therefore, you will create a void, right, in this COVID beneficiary sectors. All right. So think about it. Think ahead. It's going to come sooner than later. All right. But not within the next 1 to 2 months. But Joe Biden's election may hasten this. All right. Joe Biden's election may hasten this other sectors that are impacted by COVID to go up faster than predicted. Okay. So what is my concern? Okay. So I think, my big picture is this, all right? So I think that from building, all right, going into the election, the market will be bullish. And after the election, the market will continue to be bullish. So there's a lot of people that talk about, increased volatility, buying the volatility index. I don't think so. I think, all the expectation of, Donald Trump even fighting back on his election, on the election results, and disagreeing with the election results, having the contested election results, going to the court and all that. I think that is currently, under current scenario, unlikely. And therefore, I don't think we are going to get a lot of volatility. All right. In fact, the market hates uncertainty, and when Biden comes back, all right, or becomes president, the uncertainty factor will be removed. A lot of stimulus is going to focus. All the president has got a 30 days honeymoon. All right, so within that 30 days, all right, they can do what they want, but most of them within 30 days work very hard, all right, to implement the policy. which means within the first 30 days, all right, a lot of things is going to be done, and a lot of money is going to be printed. All right, a lot of new policies, which is market orientated. So the stock market is going to run. All right, so we're going to have, all right, a bullish market after Biden for a couple of months. All right, and that's where the challenge comes. All right, so when all this stimulus takes effect, people got money, they start spending, retail sales go up, capex go up, company results improve. Think about it. What happens to all the debts? What happened to all the money printed? What's going to happen to all that? All right. So when the stimulus comes in, what's going to happen? All right. Economy picks up. We're going to have inflation. All right. And that will be the stock market's number one enemy. And so we're going to have good stuff, right, coming. This current stimulus, right, by governments all over the world, except China, right, except China. That's the only responsible central bank around the world, all right? They are the most responsible. They are not printing. They are managing the situation, okay? And they're managing it quite well. So the rest of the world are printing, they're lending, all right? So debt is going up. And therefore, when this COVID, all right, it's over, we're going to have mountains of debts, which means interest rate cannot go up. So I remember, that at one time I had a bad fever, right? A bad fever. I was a kid, right? I had a bad fever. I was in hospital. The fever was so bad, right, that, I keep popping the Panadols and it doesn't work. Temperature keep going up. No matter how much Panadol I pop in. But as a kid, right, I didn't understand. I didn't understand. The first two Panadol worked, right? Then after a subsequent, course of Panadol, the Panadol don't work anymore because the virus in my body begins to recognize the Panadol. So, so it was the middle of the night, my fever was very high. I took the bottle of Panadols and I swallowed it. All right. Thinking that, the more Panadols I popped, the better it is. All right. But then, I had, a very, very bad poisoning. I almost, all the Panadols, nearly knocked me out. All right. And I had to be have to be rescued. So today's current situation is like that. All right. So we have a pandemic coming. So what the politicians sees around them is the economic recession, hardship, people jobless, and they want to print as much as they can. But the money they printed is already a lot, right? And they want to print some more. We're going to have another 2 trillion coming from the fiscal stimulus. When Joe Biden comes in, it's going to print a lot more. All right. So it's like, the economy is going to be overdosed, okay, with money. And this, all right, will be the real challenge going forward. So the challenge going forward is not when we have a bad economy. All right, when we have a bad economy, the central bankers, the politicians will just keep printing and the market will go up. But when the economy gets better, all right, that's where the problem starts. When the economy gets better, what's the Fed going to do? Inflation is going to grow. So what's going to happen? All right, a lot of our money will just get, debased. A lot of fiat currency will be debased. And that's why today you're seeing all of Bitcoins, gold, going up. Okay, so here you see, right, that the U.S. annualized deficit never before in history has hit close to $3.6 trillion. That's how much, all right, the Fed debts and personal saving in U.S. is crashing. So you have debts going up, you have personal saving crashing, but the story is different in China. All right, China, like I said, before that, the Chinese central bankers are the most responsible central bankers in the world. They don't resort to printing, and that is why, you know, a lot of fund managers are beginning to get bullish into the Chinese stocks because they are healing themselves without printing. So you could see that the Chinese is recovering ahead of everybody, all right? And they're very, very close now, right? They're very, very close now to even pre-COVID level, their retail sales growth, pre-COVID levels, right? So the Chinese data, you could see the GDP data, the PMI data, they are all improving. So the Chinese is getting back to shape. And therefore, you know, when the vaccine comes, when the US comes back to shape, Europe comes back to shape, the world will grow in a phenomenal phase, all right? In a phenomenal phase. And I expect that to be the first quarter of 2021, all right? The world is going to grow at a phenomenal pace, all right? And that is what you're seeing in the renminbi. The Chinese government is not printing, you know, and therefore, and they are recovering faster. And that's why, you know, the investors are putting the money into the renminbi. And you could see this renminbi is just, you know, taking new highs after new highs, and the US dollar is going down. And the US dollar is a long-term bear market story, all right? It's a long-term bear market. With so much printing, 11 trillions coming up, there's only one way the US dollar can go, and that is down, all right? So you could see, right, not only US got plenty of debt, you see this Eurozone is especially bad, all right? Today, right, you know, about 9% of the Eurozone, Eurozone deficit make up 9% of GDP, and that is the biggest deficit to GDP in centuries. All right, you know, so the Euro government, the US government is owing, the Euro government is owing, and therefore the debt will be a big problem. So let's go to some chart analysis. So like I said before, I am very bullish on the Chinese market in the short term. So then you ask, why is it that the Chinese market is not moving? So this is the CSI 300. All right. You could see that it bottomed out in 218, you know, it came back down again, and there is taking a lip. All right. And it broke the 4402 high that was made in 2008. It went up, it consolidating. And I believe that, you know, after the elections, you know, after the election, the CI 300 will start moving higher again, perhaps possibly taking 5,000 and maybe even the all-time high, right? I don't know, but I am short-term bullish on CSI on the Chinese markets, okay? But then you'll be asking, you know, why is it the Chinese market is not moving? All right, why is it that, you know, if everything is so good, why is it the Chinese market is not moving? All right, in the short term, it is not moving because a lot of funds has been channeled through the Ant Financial IPO. Ant Financial IPO is the biggest IPO in history. If I'm not wrong, it's about like, how many trillion? I forgot, maybe about 10 trillion. It's a lot of money, all right? Sorry, about 2 to 3 trillion, sorry, 2 to 2 trillion, all right, of US dollars, all right, going to Ant Financial alone. So this is a humongous amount. It is the biggest IPO in the history of the world. So it's a lot of profit taking today. Why are people selling other stocks, all right, today? Even good stocks have been sold down today. Why are they selling it? Because a lot of them needs the money for Ant Financial. And, you know, it has been at the moment oversubscribed by about 300 over times. 300 over time oversubscribed. Okay, which means a lot of redundancy money is in it. So in the end, you know, a lot of people will not, most people will not be successful, all right, in securing the IPO. And where do they put the money back? They put in the bank? They won't put in the bank, right? The bank is earning earning like a about 1 to 2% interest rate in the Chinese China markets, what would they put in the bank? When the money comes back from Ant Financial, they will plow it back to the stock markets. And therefore, we have to position ourselves before the listing of Ant Financial. So when will Ant Financial be launched? The IPO. Shortly, indicative, shortly after the 3rd of November election. So you see, right? So after the 3rd November election, a lot of things are going to take place. Right? If Biden wins, he's going to, print a lot of money, and financials money is going to flood the markets. Right? So we will have a I would say the last meltdown. That it will be the last meltdown. All right, where the markets all over the world, like especially the markets in Wall Street, all right, will take their all-time high. All right, and we have that I expect to be the final melt up before the market collapse. Okay, so it will. I believe it will be the final meltdown. All right, with so many of these confluences of factors that is supporting the markets, I believe it will be a meltdown before a meltdown. All right, so this S&P clearly on the uptrend and clearly showing that they like the Biden's presidency and therefore it's not coming off. All right, sitting on support now, but I think right now it's doing like 3453. My target after the president election maybe about 36 to 37,000. All right, so that is the S&P. And lately I've been bullish on Hang Seng, STI, and they are going up. They are going up, and I think they will carry on to go up, but in a very measured way because there's no money in the market. The money are in Ant Financials. All the big funds the money is in Ant Financials. But when Ant Financial comes back, it's going to run. All right. So same. All right. A lot of this money that comes back will not only go to China market, you spill over to the Singapore markets. Okay. But one sector that I'm not bullish about is the FANGs. All right, which is the Facebook, Apple, and Netflix and all that. I'm not quite bullish on it, and the reason is because of this chart, right? So we have a final melt up. The FANGs going to improve, but the FANGs I don't think will outperform this round. All right, just look at the charts. All right, it's making plenty of tops, indecisive movement. 3 tops is making. 3 tops is testing and testing and testing. And if you look at the history, right, when a stock market or index, right, were to keep testing and have many tops, right, when it breaks down, it's going to be fairly serious. Okay, so watch the FANGs. I'm not, very bullish. I think the best days of the FANGs are in the short term. I'm not talking about long term, right? In the short term, the best days could be already there. All right, so one stock that I like you to be looking about is this medical stock that I'm watching, and the reason why it's a good stock, just this month, it took the all-time high, doing a healthy correction. And I will be, trying to accumulate some about between $66 to $70, right? So this is my, my target to buy, to accumulate this stock, all right, 70 or to 66, all right? That's where the chart is showing, all right? It's, finish one big cycle, all right, of uptrend, downtrend. So every time it comes to around this, touching this trend line, you will have a big bounce, okay? So this is Witness MagTech 2500.HK. This is something that I look at, keep a close eye on it. All right, so this is Sini Solar, and Sini Solar is an alternative energy stocks, all right, in the Chinese alternative index, Chinese green alternative index. Okay, and it make a big part of it. All right, that is why, with Donald Trump going into alternative energy and Xi Jinping saying that China will go carbon neutral by 2026, all right, we have a big run in solar, Sini Solar. Okay, and it's coming down. All right, and as it comes down, it gives you another buying opportunity. Okay, so it's gone up too fast. All right, and it's pulling back. And I think around about $12, all right, and you know, anything below $12, 12 or below, right, could be a good time to be getting into this stock for a medium-term play. All right, so this is the China Green Energy ETFs. All right, it's already also hitting a support. So yeah, you know, just recently, a couple of days ago, it went to 92. Right, it's retraced back to 81, and I will be a buyer at 78. All right, here. All right, so watch out for this green energy ETF. So at the moment, all right, now to election, the market's going to be range bounds. All right, but so this is you know, so I want to thank my team, Juren, Union, Maple. All right, I want to thank my team for putting together this research report. All right, they spent a lot of time putting together this research report, and you know, and I hope it benefited you. All right, so you know, my job really is to be keeping you updated all the time, to keep you ahead of the markets. All right, and hopefully you not only stay alive, you stay profitable. Okay, any questions? Let me see. Sifu, what is your view on gold? All right. So, all right, Amy, all right, I know you have a lot of gold. Okay, let me tell you this, right? With all the money printing, okay, all the money printing, it's only a matter of time gold is going through the roof. All right, you know, okay, so just, why did I say that? Why did I say that? Now, look at that. You know, the recent, if you have been tracking the recent movement of gold, every time you have a stimulus, and that stimulus is only 2 trillion, every time there's a possibility of the stimulus being passed, the gold will rally. And then when you say no stimulus, gold will fall back again. All right, so gold, right, has proven time and again, right, to be very, very sensitive to stimulus. And Joe Biden, all right, will be a president in the United States that will dish out the most stimulus, all right, in the history of America. All right, so think about it. All this money is going to flood the market. Low interest rate. There's no, you know, there's no alternative, all right, to investments. Low interest rate for a long time. Inflation. So what does this all say about gold? All right, all these things, all right, are beneficiary to gold. Inflation rate, all right, low interest rates, and money printing. So what would money printing do to US dollar? It will crash the US dollars. And when US dollar goes down, gold is going to go up. So that's a macro picture, all right? So for those of you, you know, who invested in gold, I know gold corrected a little bit, all right? You know, it's like, you know, gold has been on a tear. You know, I've been bullish on gold, and it's been on a tear. It has been going up a lot. But, you know, recently it has corrected from 2,000 to 19,000, only $100. You know, all of you are saying, you know, should I be still holding to my goal and all that? All right, keep your goal. All right, after election, it's going to fly. Okay, gold is not a 2-year story. It's a 10-year story. Okay, that is gold. All right, did you see how the Bitcoins has been rallying? And Ethereum has been going up. Bitcoin was up 11%. Ethereum, those are digital gold. They are running ahead. All right. Yeah. So Boon Hui question is okay. Helmi question is, what do I think about banks? Okay. So the banks are in the value or the growth stock play. All right. They still give you a dividend. All right. Ask yourself, which asset class today give you dividend of 3 to 4%? Okay. You know, the banks are giving you that. The Chinese bank is giving you that. The Singapore bank is giving you that. All right. But people are not buying them. They're all into the growth stock. But I believe that one day, all right, and it's going to be quite soon, all right, and during Biden's first 3 months in the office, this whole thing is going to shift. All right. So watch for the vaccine to come. You know, all this banks is going to move. You know, your airline is going to move. But not soon. All right. It's not going to move tomorrow. Okay. It's not going to move tomorrow. It will move when you know, more and more vaccines, all right, come to the market, more and more testing comes to the market, But by and large, I think, except for energy stocks, all right? But energy stock will keep going down, all right? So don't go buy energy stocks, all right? But I mean, when the economy gets back into shape, energy stock will still move, all right? So that's, but energy stock will still continue to underperform, okay? So gold will be good. And what's your view on banks? Okay, so just what I think about banks, I think, like, a lot of airlines, bank, they're all at basement value already, but not time to buy yet, all right? Not time to buy yet, because you don't want to buy something and stuck, all right? So not time to buy yet, all right? The time will come, okay? And when the time comes, I'll be telling you guys, okay? So don't worry about it. As long as you are with me, all right, I will be doing a lot of this stuff with you. When I see something urgent, I need to be telling you, I will hold a session like that. All right, so don't miss the session, all right? Because a lot of work, I put a lot of work into it, all right? It's like a market outlook, all right? You see all the slides that I put in, all right? It's like a market outlook, just that it's free, all right? Yeah, market outlook you have to pay. Okay, so what about, what do you see in gold and BTC, highly correlated? Yeah, so one is, okay, why they're highly correlated, both limited amount, all right, finite amount, they need to be mined, all right? But gold and BTC, they need to be mined, not like a fiat currency, all right? They need to be, you can print as much as you want, okay? So that's not good. That is why, the Chinese government is already going to digital currency, okay? And when Ant Finance come out, the Ant Finance will implement the digital currency payment system. Okay, can you imagine that? PayPal yesterday announced that you can already use they will allow trading of Bitcoins, and next year, right? Next year, I think March, right? They will allow you to purchase merchandise with Bitcoins. Isn't that a big news? Can you imagine you can use Bitcoins to purchase things, and when the Bitcoins demand increased, and yet there's limited supply, the Bitcoins will go through the roof. All right. So this is Bitcoins. Okay. Okay. So I think that's all we have, guys. Thank you for coming. All right. And it's my pleasure to be always talking to you. Stay safe. And I hope to see you again one day. Bye.